Hi, this is Zach Meir from Zach's Traders Cafe with a look at the major markets on Thursday, the 23rd of June. Starting off with the FTSE 100, and we've got this line of resistance, the red line from April, running through around the 62.60 area, roughly where the market closed on Wednesday. RSI at 57, which is a leading indicator on further upside. So even though it looks as though this market has paused at the red line here, we still have a possibility, a decent possibility of a further push towards 65.50 over the next session or two. Stop loss on the bull argument, 61.45, which is the area of the 200-day moving average, the black line. And of course, with the referendum uncertainty, allegedly, say a close result or a Brexit result, we could see volatility anywhere within this rising trend channel range from January, which is 5,900 to 65.50. At this stage, probably, if one had to call it at all, as far as the next 24 hours, it would be that the high volatility that is expected will probably not materialize, but obviously that is quite a big call. Onto the DAX, and here we've seen the sharp reversal, the gaps to the downside and then gap to the upside. 10-day moving average at 97.93, the initial support, and above that, looking for 10,500 at the top of this rising January trend channel. Onto the US markets, and for the Dow position here, quite, well, actually, in a way, not quite as strong as the European markets. So it's still either side of the 50-day moving average around current levels. Support 17,500. The upside at the top of this rising March trend channel as high as 18,500. The RSI neutral 50, so little to guess from that. In a way, you're either trading a break of 1,800 or looking for a dip to buy into at 17,500. Moving along to the S&P, similarly marooned as far as its recent price action, with this dance either side of the 50-day moving average at 2080. At least the price action of the past couple of sessions has been above the 50-day line. And while we hold above that, 2120 is the expected upside here. Only back below 2065 at this stage would really delay the upside argument or even question its strength. Onto the Nasdaq, and you can see that support here back towards the floor of this rising trend channel 43.60, trading either side of this the 200-day and the 50-day moving averages, the blue and black lines. Still mildly bearish in the sense that we haven't been able to fill that gap up towards 4,500 from earlier in the month, and therefore the initial test here is probably going to be 43.60 at the floor of this rising trend channel from February, even if we then rebound after that. Onto the currencies, and big market in focus at the moment, clearly cable. We cleared the 200-day moving average at 146.77 very easily, basically on the first attempt, and that's now likely to come in as support. While we're above that, the top of a rising trend channel from January at 150 would appear to be the target, but not at this stage. It doesn't look as though we've got any real case for volatility, more a gentle squeeze to the upside, even if that is capped at $1.50. Onto the euro, and situation here, mildly, well, reasonably constructive. We've got these multiple, or at least three little bounces off neutral 50 at the RSI, so that does give us a leading indicator on fresh upside here. And initial target 114, and then the target over the next 2 to 4 weeks as high as 116. Only back below 112, really questioning the recovery argument here after that brief, well, it's basically a 2-day test of the 200-day moving average at the end of May. So starting to shape up better on the long side. For dollar yen, it's been attempting to recover over the last few sessions, but still really too near to that 103.55 low for June to be credible as a lasting bounce, it looks as though there'll have to be at least one test of that area under 104 over the next couple of sessions. So sell into strength up to the old May 105.55 support, and early and end of day close back above that delays the downside scenario, which could be as low as 102 at the bottom of this February trend channel. Finishing off with gold as usual here, messing around towards the 50-day moving average of 1256. There is a risk of 1235 at the floor of this rising trend channel, but the overall construction here still bullish despite that sharp pullback from 1300 plus earlier this month. That's it from me. More updates at the same time tomorrow.